Welcome to the country of open spaces. Where nature bursts and flows. Where the elements come alive. Where there is room to breathe. And places to find. Welcome to the country of open hearts. Where care for the land and people is genuine. Where life is for living. Where time spent together is never time wasted. Where lasting partnerships are formed. Where strangers are treated as friends. And memories are treasured forever. Welcome to the country of open minds. Where learning is embraced and opinions valued. Where freshness is championed and quality prized for the world to enjoy. Where nature inspires incredible thinking. Where ingenuity drives innovation. And productivity. Where big ideas are born every day. And new technologies are perfected. Where the impossible becomes real. And where every sunrise inspires the extraordinary. Welcome to the country of open spaces, open hearts, and open minds. Together, we can do amazing things.
Good morning, everybody. Welcome to Queen City Law and a presentation today on the active investor category of the New Zealand Government Immigration Policy. Today we have four very talented speakers. We have my colleague Bradley Soul from Queen City Law. By way of background, Bradley has probably acted on more successful business immigration cases than just about any lawyer in New Zealand over the last 10 years. He also presents widely at immigration conferences. Myself, I'm former chairman of New Zealand Association for Migration and Investment and convener of the New Zealand Lawside Immigration Committee, and I've been in this space for, believe it or not, some 30 years now. And our business model here at Queen City Law is to attract and successfully represent high net worth and ultra high net worth individuals with their immigration, and then to assist them with all of their commercial and other legal requirements in New Zealand for the rest of their life. And we're very well set up, and we've done that very successfully for a long time. Incidentally, we have also been the 16,000 lawyers in New Zealand. We've also been named the Property and Construction Law Firm of the Year for 5 years in a row, and the Boutique Law Firm of New Zealand for 3 years. And our immigration team has won numerous awards as well, and is one of the largest in New Zealand. We also have Mark and Andre from New Zealand Venture Capital to talk about their fund. And we have Eden from BLACKBULL to talk about the equities market. And finally, we have our friend Roger from BENTLEYS, Roger.Thompson. Roger is a well-known New Zealand author in tax and was formerly a lawyer actually, and has been a chartered accountant, a senior chartered accountant for some time, and writes a lot of the most detailed text on the law of tax in New Zealand, and is very smart at representing international entrepreneurs and ensuring compliance with our regime. So without further ado, Bradley, could you please crack into it?
I'll just go through the basic high-level introduction about the key requirements for the Active Investor Plus category and kind of run through the whole process. And then if you do have any questions specific to yourself, then feel free to get in touch with us directly. So yeah, the resident visa requirement is pretty straightforward. The investment amount that's required is between 5 million to 15 million, and you're required to invest that for a period of 4 years. And during that 4 years, you'll be required to stay at least 117 days, and it's up to you how you want to allocate how you spend those days in New Zealand. Whether you want to do it, 1 month every year for the 4 years, or you do that at the end of the year, at the final year, or the 4th year anniversary. It's really up to you. It's very flexible. There is a basic English requirement, which is IELTS 5.0, which is not very high at all. It's a very entry-level English. And of course, you do need to meet the health and character requirements. So what that means is that you have to have no criminal background, or you have to have no character issues with immigration in the past. If you do, then there's ways around it. But would request that you have a chat with us in that regard. And same thing with health. Immigration can only grant visas for those who have acceptable standard of health coming into New Zealand. And in that application, you can also include both your partner and dependent children. So dependent children is up until the 24 years of age. So as long as your dependent child is 24 years old and is single, then you can include that in the application as well. So investing in New Zealand, the key requirement, as mentioned before, you need to invest between 5 to 15 million New Zealand dollars. And you need to invest that in acceptable investments. And there's 3 types of investments that are considered acceptable. One is direct investment. All that means is basically you're investing directly in a company by way of shares. And then there's managed funds. So managed funds has to be approved by the New Zealand Trade Enterprise for you to qualify or to at least invest in that fund. So NZVC, New Zealand Venture Capital, is an approved managed fund. And then obviously the listed equities or publicly listed shares, that's also considered acceptable. Now the important point here is that depending on where you are going to invest, the weight or the value of your investment will be subject to the weighting. So, for example, in direct investment, if you invest $1, that will be equivalent to $3. So instead of requiring $15 million, you only need to invest $5 million. If you invest in the managed funds, because your $1 is equivalent to $2, then you don't need to fully invest $15 million. You only need to invest $7.5 million. And for listed equities, because the ratio is 1:1, then you can only, the maximum investment you can do is 7.5 million New Zealand dollars. So an example of a different type of combination that you could decide to invest or to have your portfolio is the example that we provided here. So to have a weighted value of 15 million, you can invest 7.5 million in listed equities and 3.75 million in managed funds. So your total investment requirement would be around 11.25 New Zealand dollars in millions, or around $7 million US. Okay. And in terms of the application process, Immigration New Zealand is one of the fastest processing countries in terms of being able to expeditiously approve applications. So the process is, if you submit the application, it will usually take around 1 to 3 months before your application is approved in principle. And once an application is approved in principle, that means you're pretty much more than halfway in terms of getting your residence visa. The second step is essentially just to invest within 6 months in one of the acceptable investment criteria. So after your application has been approved in principle, you can decide to put 1 million in equities and then transfer the funds. So that would mean that your residence visa can then be issued at that point once you have made the transfer and investment, or if you decide to put $500,000 in managed funds, or you can put in $100,000 in direct investment. And then once you've complied with that, the visa can then be issued, and then there is going to be conditions imposed in the residence visa, which will be your 4-year investment period and the condition that you have to spend 117 days. Now, the investment date starts from the date of when you make the investment. Or if you've already made the investment before you submitted the application, the investment period starts from when your application has been approved in principle. And as part of those conditions, so you don't have to fully invest all of your investment in one hit. So you can invest 50% of that in the first 18 months, and then the balance within 36 months. But you are expected to maintain the full investment for at least 1 year for the full and final 4-year period. And at that point, once you've complied with your condition, meaning you've fully committed and invested for 4 years, you've stayed the 117 days, then there is a special category of visa in New Zealand that's not applicable to other jurisdictions, which is called the permanent residence visa. So what that means is that once you have achieved permanent residence visa status in New Zealand, that means you can never lose your residence visa status, irrespective of whether you remain in New Zealand or not. So you have an indefinite status of being a New Zealand resident. Compared to other jurisdictions like Australia, you have to renew that every 5 years, and you have to stay at least 2 years of that 5 years for you to renew your resident visa in Australia. In New Zealand, you are an indefinite resident visa holder, provided that you meet those conditions. So that's pretty much the investment category in a nutshell, in a very high level summary. Please do get in touch with us if you have any questions specific to your case. And I'd like to invite my colleagues to present.
Hi, my name is Mark, and I'm one of the founding partners of NZVC. And we're a venture capital fund based in New Zealand. We are approved for the NZTE to be one of the investments that you can make in order to get New Zealand permanent residency. And we'll quickly dive in and tell you a bit about ourselves. There's other funds that you can invest into. And I think what makes us different and special is that we're actually New Zealand's first operator-run firm, meaning we as a team have experience starting companies from the ground up and exiting them. And our experience is mostly in Silicon Valley. It comes from Silicon Valley. And part of our team is actually based in Silicon Valley. So I had a couple of startups, one of which I exited back in 2018. And I came to New Zealand in 2020 as part of a government program to bring entrepreneurs here. And I started this fund alongside Ajay and Glenn. And Ajay was actually one of my first investors in my first company. And he'll introduce himself.
Yeah, hi everyone. My name is Ajay Gupta, and just in terms of background, I have 22 years of experience in equity trading, where I ran Asia Pacific business for Merrill Lynch, first out of Tokyo, then out of Hong Kong. So I'm very familiar with the region. And 9 years ago, I moved to the Silicon Valley with the intent to get involved in the startup ecosystem. And both Glenn and I, we made a lot of angel investments through a variety of networks here in the Valley. And, when Mark, he was one of my investees, when he was doing his EdTech startup, he ended up moving to New Zealand as an Edmund Hillary Fellow. And he described the amazing ecosystem being built in New Zealand. And that got the three of us excited to do this fund. And it's a pleasure to be here and talk about it.
Yeah, and our third partner, Glenn, he was early at Google. He helped build the Google Brain team. And he has a lot of experience. He's previously been venture partner in another VC firm in the Valley. So the three of us are kind of the main partners. At NZVC, we also have some venture partners. These are folks who help us evaluate deals, look at deal flow, look at new deals. One person I highlight here is Ajay, and he actually runs one of the top business magazines in New Zealand called M2. So a lot of our companies get featured there. And then on the flip side, a lot of the companies that he features, we also take a look at from the fund. Now, one of the questions that we had coming from California was whether there's actually enough deal flow or enough interesting companies in New Zealand to make this fund something where we can make a decent return for our investors. And I think what we realized was that actually New Zealand is at an interesting kind of inflection point right now for three main reasons. And specifically, the normalcy and around kind of COVID and being able to be kind of a stable place during COVID allowed a lot of Kiwis to return home, a lot of expats to come back home. So that brought a lot of talent back to New Zealand. Remote working was normalized, and New Zealand is actually very ideally situated 3 to 4 hours away time zone wise from both the West Coast, California, and from China. So depending on, regardless of which kind of market you're targeting, it's actually very ideally situated. And finally, there's a lot of investors coming in on the investor visa. In fact, our fund, part of the reason that we got oversubscribed in this fund is because we had some investors come in through the Investor One, Investor Two, and now the AIVP programs. Also, New Zealand, just kind of by its nature, Kiwis are very innovative. Part of it is having to live on an island, being very scrappy. There's this number 8 wire mentality here. You can kind of build anything out of number 8 wire, fix any problem. And there's a history of companies over the last decade or so exiting for over $1 billion, close to $1 billion or over $1 billion, which is kind of what we target with the fund. Is we try to get at least 1 or 2 unicorns in our portfolio. And yeah, I'll turn it over to Ajay to talk a bit about kind of our portfolio. And but yeah, I'll quickly just mention that we have, we think New Zealand, given this is a small country, can only be uniquely good at only a few certain areas, right? And so one of those is B2B SaaS, so basically selling software to other businesses, and that's partially because there have been previous successes in that sphere, in that industry. One of which is Xero. Same thing for marketplaces. There's a company called TradeMe that had a very successful marketplace here in New Zealand. With deep tech, there's a company called Rocket Lab, which is actually, a SpaceX competitor in deploying and launching satellites. And that was a company that went public 2 years ago. So we think New Zealand has a couple of industries where it could be the number 1 in the world, and those are the industries that we're targeting as part of our portfolio.
Yeah, just to talk about a couple of these segments in more detail. We have invested in about 43 startups. So the fund was launched in July of 2021. That was the first close of the fund. In the last 2 years or so, we have made over 40 investments, and that's after going through a deal flow of about around 500 or so different startups. And we found that there's a whole sort of virtuous ecosystem being built on the back of the successes that Mark talked about, Xero and TradeMe and Rocket Lab, and a lot of these people who worked at these companies are now coming out and starting their own ventures, and that's where we are getting involved. If we can go to the next slide, Mark, I can talk about the portfolio construction. So our view on New Zealand is that you have to go really broad, given that we are limiting ourselves in terms of geography of New Zealand. We want to be very kind of sector agnostic in that way. And luckily, amongst the 3 general partners and 3 venture partners, we have whole range of expertise across different verticals, and that's what you see in the portfolio construction. So what we have always targeted is a portfolio of around 45 to 50 seed stage companies, out of which we think there will be at least 8 or 10 that would be breakout successes, and we'll write bigger checks in them, $500K to $1 million. And the fund overall target we were running with was $15 million. We have had, as Mark said, more commitments than we expected. We are happy to stretch it to $20 million in terms of overall subscription. And off that 17 that is committed, we have deployed about 7 million. So we have, I would say, another 2 years where we would still be deploying our initial checks. And then beyond that, it would mostly be follow-on fundings into Series A and B type transactions. The term of a typical VC fund, just in case people are not familiar, is 10 years. And we have some optional extensions on that up to 3 years. And we reserve about 40% of the capital for follow-on funding.
Yeah, and I'd maybe note, that if you're coming into the fund now, you're actually coming in at a very de-risked point in time. In fact, the overall fund is probably up about 10%, and you're coming in kind of at par to what initially investors came in at. So, yeah, that's partially due to some of these breakout successes that we've had to date. Had 9x, a 7x. Our biggest investment to date has done 1.65, and yeah, we've seen those as markups, specifically paper markups. And then in terms of growth, some of the companies we've invested into have achieved significant milestones, whether it's 1 million ARR for companies we invested into super early, or for Parrot, it's 10 million ARR. For Upstock, they've gotten to 100 million GMV, which is almost like a 10x growth since from when we came in. So obviously these companies also have pretty big up rounds when they do have an X financing. And we also have a select number of AI bets, which have all done very well. These are mostly enterprise products focusing on enterprise customers. And they've all, done surprisingly well, given that, there can be a lot of hit and miss here. Yeah, and we are open, like we said, until March of 2024. And please get in touch with us. We'd be happy to tell you more about the fund, tell you more about what we do. And this is our website here. And looking forward to chatting further. Thank you.
Yeah. Maybe one thing I can add to this as well is that, as Mark said, there are a number of different venture capital funds in New Zealand. Sort of our differentiating point is not only that people like Mark and Glenn and myself have a lot of expertise with either building startups or investing in startups here in the Valley, but also that we provide the much needed bridge to New Zealand companies as they're growing and globalizing, and by connecting them with sources of capital here in the US. And that's why we have, 50% of the team sitting in Silicon Valley and 50% sitting in New Zealand. And that kind of lends itself to conversations that our founders would typically not be able to have with the VCs here. And between Glenn and myself, we have a fairly large angel portfolio, which has received funding from the likes of Sequoia, NZVC, and Andreessen Horowitz, and so forth. So, we have some contact points, et cetera, that we can bring to the table for our founders. And that's what we really appreciate about the NZVC fund.
Thank you.
All right. Thank you.
I want to pick up on that as well. You mentioned, it's so easy to look at a presentation like this and see 40 investments and a few breakout companies, but I've really seen the work that has gone into it. 500 meetings, as you talk about, the due diligence required, but then leveraging that network that you have as well, being able to bring in just this huge body of expertise locally and internationally as well, to be able to look at that due diligence. So there's really an awful lot of work that has gone behind the scenes just to get to this point even. Last 18 years, I've been working from a media perspective, and we've been covering a lot of New Zealand startups. And Mark mentioned a couple of times breakout and inflection point, and really punching above our weight. And you could see that, but I've always felt that we have been constrained by smart capital. So it's really been over the last few years where we've seen, through the likes of the AHF program, we've seen a lot more VC activity. I mean, through the publications, we've profiled a lot of them, but there was something about NZVC that really that really spoke to me in terms of just the team, just the operator experience, the domain expertise across a whole lot of areas, and just this sense of care, as Mark was saying, being able to support startups through their life cycle, and really this connection, this bridge with other markets, certainly into the US and so further. There's something really nice about being able to give New Zealand startups that base here without the likes of Rocket Lab, say, having to go international for fundraising straight away. So I'm really optimistic about New Zealand as a base for startups, and you can see that in the performance of the fund so far. But we are at an inflection point. There are a unique set of geographical factors, social factors, that really give us an edge in terms of so many sectors, like aerospace, as Mark was talking about. We have land to orbit potential. We have so much. Even in terms of aerospace and our geographical location, there is so much more that we can be doing. You can see that starting to come through. So I feel like what NZVC are doing, the base for this first fund really is the base for some incredible startup performance moving forward. So I'm really excited from a media perspective, and then also being involved in the fund. It's a real privilege.
Really appreciate that. Thanks, Mark and Ajay, and obviously Andre. I'd now like to invite Eden to present.
I'm with BLACKBULL, where we've been one of New Zealand's leading brokerages for about 10 years now. And we just invest in equities, our department, BLACKBULL Wealth. And I guess the thing is, it's like, why invest with us? You can buy equities anywhere. Why invest in New Zealand with us? Well, look, I mean, New Zealand's tiny, but it's where we live. I think the thing is New Zealand's one of the only places where you can email the CEO and you get a reply within the day, within 5 minutes. So, we have a pretty good understanding of a whole lot of companies, and we talk to the people who do it every day, And we're actually home to a bunch of what we call hidden champions, success stories that the rest of the world is relatively unaware of. I like to think of them as things that are things that Buffett would invest in them if he knew about them. Which is a bit of a claim, but you can, and again, also just on the sort of drier side, you invest in a fully liquid portfolio. It gives you a bunch of capital growth. It gives you yield. It gives you dividend. And the returns are relatively uncorrelated to the US or Europe. So you're actually diversifying in a first world country, but in a relatively interesting way. In terms of hidden champions, Fritel, Fisher & Paykel Healthcare, EBOS, Mainfreight, they've all done just stunningly well over the last decade, and they're all run by good people, and they're all businesses that do what they do incredibly well, and that's really all you need to do to make money in this market. We love Mainfreight, but these hidden champions, they're a real point of difference. Mainfreight, EBOS, Fisher & Paykel Healthcare, all these things are things that Wall Street would love if they knew about them, but they don't, because they're $10 billion companies. They're relatively tiny compared to the global market. The hidden champions within New Zealand are a real point of difference. Things like EBOS, quality compounder, Mainfreight, and they're the things that most of the world wouldn't know about, but we do, because we're living this every day. We're talking to the management every day, so we have a pretty good grasp of what's going on. And Buffett's always talking about, and if he started with $1 million today or whatever, invest where nobody else is looking. And I think in a large part that's New Zealand. So, investing with us towards this visa residency program is you get a liquid investment. We can liquidate that at any time. So you're not stuck into anything. You're going to get about a 5% yield on your cash, which is pretty good. Because we're investing in a relatively concentrated way in these high quality companies, you're probably going to outperform the NZX 50. As I said, it's uncorrelated. And you're actually investing in one of the best countries in the world. So I think that's hard to beat. Look, portfolio composition, it might look a bit like, a whole lot allocated towards hidden champions. Then you've got your yield stocks, you've got your gentailers and all that. And then just stalwarts, things that have been around forever but are going to keep producing good returns. In terms of thematics that we like, healthcare, next slide. Healthcare, why? Because there's a moat, you've got patents, you've got technologies. It's hard to replicate something like what F&P Healthcare does. We have an aging population in the world, really, but especially in New Zealand and Australia. That's more healthcare demand. F&P actually estimates that the market's going to grow around 12% per year. So to us, it's obviously exceeding GDP. So it's a nice area to be in. And we're home to two of the best in the area, EBOS and F&P. So that's a thematic we really like. Another one is tourism. I don't know if you've been to the airport lately, but it's busy. Airport volume is actually basically at or above pre-COVID volume. So that's a pretty good sign. THL, Tourism Holdings, that's another hidden gem. Their camper vans are fully booked out for the summer, right? So, it's a classic case of supply and demand. There's just a whole lot of demand for this stuff. And I guess the other thing is that New Zealand's it's a deliberate decision. If you're coming here from Europe, you're going 30 hours on a plane. So it's not just flying to the Gold Coast for a wee holiday or something. So the spend is actually far greater on average, which means that New Zealand tends to do better in tourism than per person than most other countries. And then finally, just back there, infrastructure, Port of Tauranga, it's not going anywhere. Auckland Airport's not going anywhere. Main Freight, 60% of their revenue is actually US. So again, they're an infrastructure provider. They're a leading shipping company, but they're so built into the global economy that it's hard to imagine a world without them. And then my favorite company in the world, Infratel, because they own everything from data centers to part of Wellington Airport to bus stops, right? So they're everywhere. And they've just built up a portfolio over a long time of quality assets. And that's kind of what we constantly look at investing in. So in terms of a New Zealand, in a 7 mil investment, do you want next slide?
Next slide. Yeah.
Thanks, Fred. In terms of a 7 mil investment, basically a gross income of about 350,000 on dividends. We're projecting around 10% capital growth in terms of actual capital appreciation. And I guess the other thing that we offer that a lot of other guys don't is we can customize this portfolio to suit your values and needs, So that's pretty good. So our model portfolios, which we've been running since 2015, have returned 10% in New Zealand annualized. We're pretty proud of that. So that's sort of the direction we're looking in. It's not, it's a long-term investment in good companies. It's not reinventing the wheel, but it's just doing things well and doing them right. Yeah.
Awesome.
Well, thank you very much, Eden. So now we will go straight into Roger.Thompson, Chartered Accountant with Bentley's.
Thank you, Marcus. I'll just give you a quick introduction to Bentley's. My partner and I, Nick Denhire, we were both partners in a much larger accounting firm some years ago. And we set up a boutique practice, Bentley's. We've also part of the Bentley's network throughout Australasia, and globally we're part of the Lineal Global Network. So we're a boutique firm in Auckland, but with international connections. We specialise in looking after high net wealth families, as well as a lot of New Zealand businesses. We do all the regular sort of tax and accounting compliance, but also with a focus on taxation advice and also strategic advice. We also provide directorship and trustee services. I'm not sure if I'm last because this is the most exciting presentation or because it's the most boring. And excuse me if there's too much detail, but I'll try and get through it pretty quickly. A key thing to understand for anybody looking to become a resident of New Zealand is that New Zealand taxes residents on their global income. So wherever you got your money invested, you'll pay tax in New Zealand. That's certainly the case for regular people who've been born here. and that's what we're used to. It's based on residency, not citizenship, so that's an important distinction. I'll also quickly just mention the tax rates, and then also something that's very good news for new immigrants to New Zealand is that they effectively get a 4-year tax holiday on their overseas income. So that's a very popular aspect. But after that 4 years, or it can be up to a bit longer than 4 years, but after that period, they're going to be taxed as a full New Zealand residents. There are some structuring opportunities which might need to be considered before moving to New Zealand. Okay, the tax residents. A lot of people say, well, how many days? I've been in New Zealand 120 days or 55 days or 92, whatever. You know, I'm under the 183 days. I'm not a tax resident. But there's a second test, and this one is actually the most important one, is where is your permanent place of abode? Or do you have a permanent place of abode in New Zealand? So, for example, if you came to New Zealand and purchased a property, which you stay in all the time, or whenever you come to New Zealand, or if you took out a long-term lease and rent a property and you stay there every time you come to New Zealand, then you've probably got a permanent place of abode in New Zealand. And I sort of apply what I call the wardrobe test. If you've got your shoes and clothes hanging in a wardrobe somewhere, you've probably got a permanent place of abode. And if that's in New Zealand, doesn't matter if you might only spend 1 day in the country during the year. If you've got a permanent place of abode, you could potentially be a tax resident in New Zealand. It is important to consider double tax agreements because sometimes you might be tax resident in New Zealand and also another country, and we need to look at the double tax agreement. Just quickly on the tax rates, the key thing to note there that for an individual person, if you have income over $180,000 per annum, you're on the top tax rate of 39%. We'd like to see that come down in the future, but I think a new government's come in and they've found the coffers are a bit empty. So serious tax reductions are probably not on the agenda straight away. There's a little bit of tinkering, but nothing too serious. So I think we're stuck with that 39% rate for a bit longer. If you've got a company, a New Zealand company pays tax at 28%, and if you have a trust, you can allocate the income to beneficiaries, taxed at their personal rate, or if you retain it in the trust, then from next year, the current rate is 33, but from next year it's going up to 39%. Slide. Okay, so I mentioned about this 4-year tax holiday, and this is eligible for first-time residents, people that haven't previously been resident in New Zealand, or if they have been resident in New Zealand before, but they've been absent for at least 10 years, then they may still qualify for it. Now, it really only applies to investment income. It doesn't apply to services income. So typically, if you've got rent, interest, dividends, those sorts of that sort of income, then for the first 4 years that you're tax resident in New Zealand, you don't pay any tax on it in New Zealand. It doesn't cover things like salaries, director fees, and other services income. So you still have to pay tax in New Zealand on that, subject to these double taxation rules I mentioned and so on. We talk about it being 4 years, but depending on your circumstances, it could actually be a bit longer than 4 years. If you've got a permanent place of abode, that'll start your 4-year period. But if you don't have a permanent place of abode, it actually really doesn't start until after you've been here for 183 days. So you could get more than 4 years out of it. Let's move on there. Now, when that 4-year period ends, however, you're going to be taxed in New Zealand on the full global income that you receive. So now you can get credits for tax paid overseas, but sometimes the tax rules may be different overseas. You might be taxed in a different way. You might be taxed on capital gains and not in New Zealand. So So sometimes there's not a perfect match of those foreign tax credits. If you've got foreign equities, shares, stocks, we've got special rules, CFC, which stands for Controlled Foreign Company, and FIF rules, Foreign Investment Fund rules. Even if you don't receive dividend income, you can still have a tax liability for New Zealand tax purposes. So it's quite important to really consider how your investments will be taxed and be aware of that. Foreign debt instruments, things like loans, bonds, bank accounts, they're generally taxed on all gains. So generally speaking, New Zealand doesn't have a capital gains tax as such and doesn't tax capital gains, but on debt instruments, capital gains are taxed, and that can include price movements, exchange rate movements, and so on. It can also apply to liabilities. So, for example, if you own a property overseas and have a mortgage on it or a loan on that property in a foreign currency, you could find that the currency movements are being taxed in New Zealand. So now again, all of this applies after your 4-year tax holiday is finished, but it's important to be aware of it and consider those implications perhaps before you come to New Zealand. If you've got a trust offshore, you've got 12 months to effectively elect to bring it onshore or to leave it outside of New Zealand tax. We'll just move on there, Brad. Now, there are some structuring opportunities, and these may apply to certain people who want to restructure their overseas investments and perhaps transfer them out of their personal name prior to becoming tax resident in New Zealand. And this is quite important if you're looking to do this, that it's done before you actually really step foot in New Zealand. You might set up a trust overseas, and basically all the income in that trust is kept out of New Zealand. If you bring the money into New Zealand, then you might have to pay a higher rate of tax on it. So it's a good strategy if you've got other sources of income and don't need to call on the assets in that trust. But if you're going to be bringing the income from that trust into New Zealand, then it may not be such a good strategy. But sometimes we find that people might become resident in New Zealand, but they're not sure if they're going to stay here forever. They might have other family that stays overseas, and they want to provide for them. That setting up a trust outside of New Zealand before coming to New Zealand can be a good strategy. Next one there. Thank you. So that's the end of my presentation, and happy to answer any questions if you want to email them through at some time.
Well, I'll just also mention, augment Roger's final comments there. We also do not have stamp duty or death duty or gift duty in New Zealand, just to say something positive. And that's been a big driver for some of the high net worths out of Japan who are facing death duty rates of over 60%. So look, that's a talented bunch of presenters today. Thank you very much for tuning in. Hopefully no one's fallen asleep, and we're happy to answer any questions anyone may have.
Thank you so much for your time. Really appreciate it. We'll have a finalized video of this so we can actually send it out to those who couldn't attend today, who's expressed interest. So thank you so much. And for everybody here who's taken the time to present, Eden, Roger, Andre, and Mark, and Ajay. Okay. Thank you so much, guys.
Thank you.